How to calculate operating cash flow. Operating cash flow refers to the cash your business generates from its normal operations. Essentially, it shows how much cash flow you've made without taking secondary sources of revenue, such as interest or investments, into account. This figure can give you a clear picture of how you're doing financially at your business's core. While positive operating cash flow indicates your business has enough money to sustain and grow, a negative cash flow means that you're unable to cover your expenses unless you borrow money, cut expenses, or raise additional capital. Let's take a closer look at how to calculate operating cash flow. Operating cash flow formula. When looking at how to calculate operating cash flow, there are two methods you can use to calculate it: the direct method and the indirect method. While the direct method is the easiest and most accurate, it requires reconciliation. The direct method is operating cash flow equals total revenue minus cost of goods sold minus operating expenses. The indirect method adds depreciation and adjusts for changes in cash receivables and inventory, adjusting the net income. It's preferred by most businesses and investors. The indirect method is operating cash flow equals net income, revenue minus cost of sales, plus depreciation minus taxes, plus or minus the change in working capital. Components of the formula. Now that you know how to calculate operating cash flow and the components of the formula, here's a brief overview of what they are and where to find them. Net income. Net income is how much your business earns from its operations. It's your company's total revenue minus all expenses. You can find it at the bottom of your income statement. Depreciation taxes. Although depreciation taxes are referred to as an expense on your income statement, they're not always cash charges. Therefore, they'll need to be added back to net income. Changes in working capital. Working capital is your current assets minus your current liabilities. You need to subtract any increase in assets and add back in any decrease. For example, let's say your business sells tennis equipment and reports the following figures: net profit, $100,000; uncollected customer debt, $50,000; debt owed to suppliers, $10,000; and depreciation expense, $5,000 per year. If you use the indirect method to calculate operating cash flow, you'll end up with $65,000. $100,000 net profit minus $50,000 uncollected customer debt, adding back $10,000 debt owed to suppliers, and also adding back $5,000 depreciation, $65,000. Need help with how to calculate operating cash flow? Contact GrowthLab today. At GrowthLab, we help small businesses like yours succeed. You can trust us to calculate your operating cash flow and make recommendations on how you can use it to increase your revenue and meet or even exceed your business goals.